Hey, good morning. This is Mayor Valensky with Driving Markets, talking about markets while driving. So let's look at what has been driving markets lately. First of all, anything said in this piece is only for media publication. It's an opinion only. It's not investment advice and not financial advice. And I'm not going to guide you what to buy and sell. That's all your decisions. Just to give you a quick market summary, that's the idea of driving markets. Let's kick off. On Friday, the markets jumped up dramatically in the States on the back of very positive corporate earnings, and that's given a big boost in confidence and sentiment overall to investors and traders. But if we dig a bit deeper into that, let's look at what really is driving markets. If you notice from the beginning of the year, trillions, billions has been wiped off shares. Unbelievable. Jeff Bezos's values just dropped by $7.5 billion after Amazon numbers crashed. But on Thursday, Apple came out with record numbers and their shares jumped 7%. I'm a big bear of Apple, big seller of Apple. I don't believe Apple's actually going to go anywhere, but yet they do beat revenue every time because they're cash cow. Cash cow is when you take your existing customer base and you just milk it. They haven't brought in anything innovative in the last 10 years. I've said this over and over again. This lack of innovation will eventually lead to the downturn in that company. However, looking overall at the market, you can't fight the trend. It looks like the bulls have got control of the market at the moment and they want the market to go up. But digging a bit deeper, as I said earlier on, let's look at what really is driving those markets higher. Markets have fallen off the cliff from January all the way through to now. And the Wall Street bankers, the JP Morgans, Morgan Stanley, Goldman Sachs, Bank of America, Chase, all of them, traders need to get the bonuses. They need to get the millions of bonuses by December. Otherwise, they're going to end up having cash flow difficulties, those particular traders. So they're ramping up the shares to try and reduce the overall annual losses on their trading book. If they can reduce those losses and turn that into a profit, because they were all long, none of them were short. All the hedge funds and all the traders in the major banks on Wall Street and the UK and in Hong Kong were all long, and they've have severe burnt books and burnt ledgers. Now what they need to do is get that back into profit so they can get their bonuses paid in December. I've worked at the banks and know how it works. I've worked at all the major banks. It's there. I know what goes on. It's a lot of manipulation. Don't get pulled in by this rally. We have to look at fundamentally what is the problem with the market. The main problem with the market is liquidity, whereby the cost of money is going up. Number two, the bond buying program, the QE, quantitative easing, has now stopped. So the central banks, the Fed, the UK, the ECB are not pumping money into the economy. And by that lack of pumping money, it's got to ask a question: what is going to sustain the move upwards in the market? And there's nothing there. There's nothing really there to sustain it. The only element that's there to sustain the potential growth in the market is full employment and higher consumer spending. But if we get higher consumer spending, then interest rates are going to rise in the US, in Europe, and in the UK. So they've got a problem. The problem is as follows: is that with higher consumer spending, there'll be demand on the goods. That will feed through to better corporate profits, but will turn around to sting you. And the sting would be so severe because inflation is going to go higher. Even with energy prices that came down since June, inflation has still gone up. Why would inflation still go up if one of the major components of inflation has gone down? And the reason being is because you've still got a China supply route problem. And that China supply route problem has just got even more difficult at further lockdowns this last few days in China. That's going to frustrate the supply chain. Putin is not going to give up on Ukraine, so you're going to have still a supply issue. In fact, he's just suspended the distribution of commodity agreement that he signed back in the summer with Turkey to use Turkey as a port to get soya and all the soft commodities out into Europe. That's now been suspended. You've also got the Nord Gas Stream line, which has been either blown up, sabotaged, or whatever, dismantled, and that's going to cause energy prices significantly to rise in Europe. In the UK, they're going to suspend the energy support bill, and that's going to cost the local household a lot more money than did previously. So you're going to have rising inflation over the next year. Don't be fooled by this rising market. The market shot up on the back of corporate earnings, but it's got nothing there to sustain it, as I said earlier on. Friday, the dollar was sold off. So those who are dealing in FX and foreign exchange, the dollar was sold off because equity markets went up. The pound went up to 116.5. The pound against the dollar cable looks like a good bet, especially with the new prime minister in place. The pound could get a bit stronger as we're going on, back up to 120, back up to 122. The euro also was stronger against the dollar, but you can expect that to float all the way down to 94.95. If anything, what this market looks like, it looks like overall a sell. Take the dollar yen. Dollar yen, I expect dollar yen to go back above the 150 level in the near future. So you're going to have dollar yen strength there on the foreign currency markets. Crypto markets, I got a message yesterday from a viewer, is this time now to buy into Bitcoin? In my opinion, no, it's not. It's time to sell Bitcoin, time to sell the cryptos, because the cryptos are a risk asset. In other words, if there's appetite in the market to take on risk, then that will rise. And you could have a rise in equities in cryptos over the next day or two. If you're a day trader, that's fine. It depends what your view is. If you're a swing trader where you want to look for a longer term, then obviously now's not the time because it's already had the moves. I think what we're looking at is a major correction. Look at a massive crash in financial markets coming ahead, and everyone seems to be ignoring it or avoiding it or not paying attention to it. I'm getting loads of comments that you're wrong, May, you get it wrong. Okay, you've had it right the first few months and now you're getting it wrong. The market's going to go up. That's fine. That's your opinion. You're a trader. If you can make markets, if you can make money in these markets going long and trading, good luck on you. I'm not going to stop you. I'm giving you my opinion that I think overall, long term, over the next 2, 3, 4 months, these markets are going to completely tumble. I'm not talking about a day or hour by hour trading. I'm talking overall. That's the idea of driving markets. Gives you a summary and gives you an opinion. And I can't see where that liquidity is going to come from. Oil is going to go back above $100 a barrel, and the governments are going to have a particular tough time controlling inflation. This is Mayor Valensky with Driving Markets, driving while talking about markets and helping you to understand where we're at regarding global finance. Have a good day.